Hi everyone, this is Muruga Ganesh, Assistant Professor, Department of Management Studies, K.S.Rangasamy College of Technology. So we are going to discuss about the points or topics related to corporate governances. So corporate governances and its principles are the topic that we are going to discuss in the today session. So let us see what is corporate governance. So corporate governance is a continuous process of applying the best management practices and also ensuring the law is followed the way intended. So adhering to ethical standard by a firm, meeting the shareholder or stakeholder responsibilities and complying with corporate social responsibilities are the meaning of corporate governance. So there are some principles of corporate governance. The first one is fairness. The board of directors must treat shareholders, employees, vendors, and communities fairly and with equal consideration. That is called fairness in the corporate governance. And transparency. A good transparency has to be maintained by the board and it should provide timely, accurate, and clear information about such things as financial information, conflict of interest, and risk to shareholders and other stakeholders should be very transparent in a common medium. And risk management is also another principles of corporate governance. So risk management means the board and the management must determine risk of all kinds and how best to control them. They must act on those recommendations to manage them. They must inform to relevant parties about the existing and status of risk, that is called transparency, and also it involved in the risk management. Next one is responsibility. That is, the board is responsible for oversight of corporate matters and management activities. It must be aware of and support the successful ongoing performance of the company. So it should take the responsibility for the successfulness and also ongoing performance of a company. Part of its responsibility is to recruit and hire a CEO. It must act in the best interest of the company and its investors. So shareholders wealth maximization it should can be a one of the main important objective of the company. So the board and CEO should act accordingly. The accountability is another principles of corporate governance. The board must explain the purpose of a company's activities and the result of its conduct. Leadership are accountable for the assessment of a company capacity, potential, and performance. So the leadership or a board has to assess the capacity or capability, potential, and performance. So it is the responsible or accountable for the profit and the loss and whatever happened in the organization. It must communicate issues of importance of shareholders. So let us discuss about the benefits of corporate governance. Good corporate governance create transparent rules and controls, provides guidelines to leadership and aligns the interest of shareholder, directors, management and employees. It helps build trust with investor, the community and public officials. So these are the main benefits of corporate governance. Corporate governance provide can provide investors and stakeholder with a clear idea of company direction and business strategy. That is the transparency of information. So it has to disseminate the right information at the right time. So it should be very useful for the company's directors and other stakeholder of the company. It promotes long-term financial viability, opportunity and returns and also it facilitate the raising of capital. So in this aspect, the corporate governance are helping for the company. Also, good corporate governance can translate to raise share prices. That means creating the wealth to the shareholder is also another benefit of the good corporate governance. It can lessen the potential for financial losses, waste, risk and corruption. It is a game plan for flexible and long-term success. So corporate governance is very important for every organization for the decrease in the financial losses, decreasing the waste, decreasing the risk and mitigating the risk and corruptions in the organization. So another one is another is difference between corporate governance and corporate management. So let us see what is the differences between corporate governance and management. So first one is corporate governance means group of people responsible for establishing the strategy and vision in an organization. It moves establishing policies and procedures to create or ensure that the things are carried out correctly in accordance with the rules of the company. Management, on the other hand, is directed to implement the policies, procedures, and is responsible for looking after the day-to-day operations of the organization. Means the corporate governance is responsible for framing the rules and regulations, policies, and strategies. The management is responsible for executing the policies and rules and regulations. The second one is hierarchical level. Governance is carried out by directors at the highest hierarchical level, whereas management is performed by the managers appointed at subsequent hierarchical level. The directors may, however, gather necessary information and data from managers in order to discharge their governance functions effectively. So these are the two basic differences between corporate governance and management. The another one is appointment of body members. The power of appointment of members of governance body, that is directors, basically lies with the shareholders who exercise such powers in their annual general meeting. So in annual general meeting, shareholders are appointing the board of directors. However, shareholders may opt to delegate these key powers to existing directors. The members of the management are appointed or hired by the board of directors. So these are the basic differences between corporate governance and management in appointment of body members. So next differences between corporate governance and management is related to governance is related to organizational vision and its translation into policy. However, management is related to taking decisions to ensure that the policies determined by the governing body are actually implemented or not. So here, the governance is responsible for framing the vision and the mission of the organization. So the management is responsible for taking decisions to ensure that the policies determined by the governing body are actually implemented or not. So next one is orientation. Means governance is oriented towards strategy and belief, while management is oriented towards accomplishment of tasks. So the governance is oriented towards framing the strategy. The management is oriented to executing the framed strategy. So that is the another thing. The last one is carried out by the role of governance is passed to the carried out by the board of directors, while management is carried out by the executives and managers who are appointed to serve at the different levels of the organization. So these are the basic differences between corporate governance and management.